Hi there, Serial Trader here. Let's check in with the major US indices. So it was a bit of an interesting day. Earlier in the session, it certainly looked like it was going to be a strong day and an up day. And then things only declined as the day progressed and closed basically near the lows of the day. So short term, it looks quite negative. But let's keep this in perspective. As far as the overall bullish or bearish trend or wave interpretation is concerned, nothing has changed. We're still in between support and resistance essentially, and support being 26.12.67 on SPX and resistance being 27.17.49. And we've closed at 26.48.05. So this isn't actually a bearish engulfing signal because it didn't actually open higher than yesterday's open, okay? Or I should say Friday's open, last session's open. And that because of that, you don't engulf the body of the prior candlestick with today's candlestick. So not technically a sell signal, although it is a negative day, no question about that. And we did close below the T line. So that is at least short term a negative development. But again, there's just no high conviction trade here. Yeah, it was a weak day, but until you actually take out this support level, which happens to be right around that 200-day moving average now, or until you actually take out this resistance level, I mean, this can just churn around in this range and it won't really mean much at all. And because of that, I don't really have any strong desire to put a big position on for it. I'm just going to wait and watch. I'm going to let it reveal itself instead of trying to guess whether we're going to break support or resistance. Let it actually do it and then act. Then at least you have some probabilities in your favor. Right now, it's a coin flip. And, let me just get back to that wave chart that we still have in place. And I haven't had to update these charts for a while. And there's a reason for that. Because nothing's changed on them that would warrant me updating them. So we could still be working, a third wave to the downside, okay? Unless we take out this high, and then ultimately, for true 100% confirmation, essentially, this high, okay? Or we could still be working this triangle, and this could still be the E wave we have in place, and we're just having a little short-term pullback before we really start trending up in a new impulse wave. And obviously that starts gaining credibility, taking out that same resistance level that the other wave count starts losing credibility, okay? So really, either of these two are just as likely as the next until something actually changes on the chart to enforce one of them, okay? And we haven't done that yet. So back to the candlestick stuff here. So that's probably enough to mention for SPX. We'll go to the Dow Jones. And the Dow Jones actually has a little bit different of a message. Today it might have actually been a leader, and I'll talk about that. So the Dow Jones did do a bearish engulfing candlestick in that today's real body more than fully engulfed at least one prior real body, and that was Friday's real body. Okay, and closed below the T line. So now on the Dow Jones Industrial Average, you have a bearish engulfing candlestick. So that's a sell signal and a close below the T line. So if confirmed tomorrow by further negative trading, that implies that the next 3 to 5 candlesticks, so basically a good portion of the week or the rest of the week possibly, will be in that direction. Now that doesn't mean it's going to happen. It just means now we actually have a technical sell signal that if confirmed, basically increases probabilities that we're going down as opposed to up. But again, I wouldn't put too much weight into it since we are just in a range between support and resistance. And on the Dow, support comes in at 23,800 and change, and resistance comes in at 24,800 and change. So you have roughly 1,000 points, give or take, between support and resistance in the Dow. And we're kind of in the lower range between those 2 points. But again, I wouldn't really be too confident in the bearish case unless you actually take out that support level. And I'd like to see it get taken out on all the indices, okay? So let's move on to the NASDAQ composite. And all right. So NASDAQ composite. Let's zoom right in here. Negative day, certainly, for the NASDAQ. And as far as its opening, it might have had one of the weakest opens in relationship to Friday's close compared to the other indices. But it's not actually a candlestick, a technical sell signal, but it's a close below the T line. And again, like the other ones, we're just in between support and resistance. And support on the NASDAQ comes at 69.26. And resistance comes in at 73.19. Okay? So I really want to see some sort of confirmation by taking out this extreme down here or this extreme up here. And obviously this would be bullish. This would be bearish. And I'd like to see all three indices confirm one another. If just one indice, slightly takes out a support level or resistance level and the other ones don't confirm, that's not strong enough for me to act. I really need to see all three have a high conviction direction. Okay? And sometimes that's just the name of the game, being patient and waiting for the cards to be shown. All right, we'll move on to the VIX. And okay. VIX, nothing substantial there today. I mean, it went up a bit, but as you can see, there's just nothing standing out here. If VIX, again, started spiking up and breaking some of these resistance levels, along with prices breaking the support levels, that would be a more significant bearish sign for VIX. But right now, as long as VIX stays benign like this, that's reasonably positive for equities to continue advancing. So nothing really significant to mention about VIX at this time. And one little bonus, I guess, if you want to call it that. Apple reports earnings tomorrow after the close, okay? And Apple was actually a standout today in that, it didn't actually go down, which a lot of things did, obviously. And Apple actually put in, let me get right at it, a bullish engulfing. Here, I'll just delete this box showing that island reversal. Apple put in a bullish engulfing, and that's because it engulfed the prior real body, and in fact, it was a strong bullish engulfing signal, engulfed the prior real body of Friday's session, Thursday's session, and Wednesday's session. So it engulfed three prior real bodies, okay? That means that it opened lower and closed higher than the real bodies, or the opening and closes of the three prior days, okay? And that's very easy to see graphically that happened. Now, it cooled off quite a bit from where it was intraday, so certainly some selling into that strength, and it actually still closed below the T-line and closed below the 200-day moving average. So it's a nice buy signal, although I'd still view it with some suspicion, and earnings are always a toss-up. I don't particularly care for plain earnings on a directional basis, but I'll tell you what I am more interested in is buying an earnings straddle on Apple. And if you just look over here, let's bring up the Apple option chain. Now here's how I typically like to play straddles and earnings, unless they're really cheap. And sometimes they're cheap and it's worth it. But in this case, so Apple, the 165 strike, which is right around the current price, so at the money, roughly at the money. And the puts are trading at, well, let's just do it as a whole. So right now the straddle price is around $8, depending on what kind of fill you can get, okay? So the market makers are pricing an $8 move, and these are the options that expire just on Friday here, okay, at the end of the week. So option market is pricing in an $8 move, which is a substantial move in either direction. Now, being that these expire basically right after earnings, or just a couple days after earnings, I don't think that's a good risk-reward ratio. I mean, what if it only moves $6 or $7 or $7.50? I mean, it has to move more than $8 for it to really be beneficial to you. And maybe it moves $10 or $12, you do well, but those aren't those aren't like good odds for you, okay? It's kind of a 50-50 buying such a short-term option straddle, at least in this case. Now let's say it was only priced at, $3.70, and Apple normally moves more than that, then it'd be more attractive to buy a short-term straddle around earnings. And sometimes you'll find those kinds of deals. And often they're on lesser, covered stocks. Apple's obviously not a lesser covered stock, so a lot of people have their eyes on it, and that's probably why the option straddle is what priced the way it is, because Apple certainly can and has moved a lot on earnings. So what I would like to do, and I'll be looking at the prices tomorrow before I actually do this. I haven't done it yet. I'd say the July monthlies, okay, so they expire 81 days from now. And that would be, similar thing at the money. You'd want to go fairly delta neutral. So I'll show you the price of that straddle, okay? And that'd be around, $14 or $15. High 14s or low 15s, depending on your fill. Now, the chances of Apple moving significantly after earnings and then continuing to move in, either up or down, because who knows, more than $15 in the next 81 days, that starts getting a lot more probable, okay? And that starts getting me a lot more interested, because now you're not just relying on earnings to quickly do, a move in excess of what the market is priced in. Now you're, taking advantage of the fact that earnings may kick off a much larger move and be a large move in itself. That's more the way I like to play option straddles, at least in this kind of situation. So I'll look at it. I'll look at it tomorrow. I haven't bought this straddle yet. And who knows what Apple will be trading at near the end of tomorrow, and maybe the at the money will be the 170 or the 160. I mean, right now it's kind of a 165 be at the money. So we'll see how it looks near the end, and perhaps initiate a trade if I feel it's warranted. But if you look at, this really demonstrates it for you. So the implied volatility of the at the money puts expiring in July is 24%, okay? The implied volatility of the at the money calls in July is slightly less, 23.36%. Let's just call it around 24%, so similar. So that's typically what Apple's implied volatility is, somewhere in the 20 percentiles, okay? Now, if you look at the 4th of May, 2018 expiration, so the ones that are just going to expire shortly after earnings, look at the implied volatility on this. On the 165 put, 54%, and on the 165 call, 48%. So you're paying a much higher implied volatility, okay? So you're really getting a worse deal. I would rather buy something that has a lot more time left. Granted, you're going to pay more for it, but you're paying a lot less for that implied volatility. And because of that, your chances of success just from an actual large enough move in the underlying, so the actual delta change, okay, or the movement because of the delta, that's really putting things more in your favor than buying basically an implied volatility that's roughly double what this one's is, okay? So that's just some food for thought. Anyway, I think that's all I'll cover in this video today. So we'll just keep an eye on these US indices. They will reveal direction here, and maybe it'll be this week, and maybe it will still just stay in this range for the rest of the week. We'll have to just wait and see. But that's really what I'm waiting for, and that's also what I'm waiting for before I make any real big moves on individual names, because there's a lot of individual names that have nice patterns that look corrective and imply a new wave to the upside once complete, but I'm not ready to really jump on them until I see some sort of conviction here on the indices, because the correlation between a lot of individual stocks and, for instance, the S&P 500 is quite high. Not every stock's correlated, and sometimes the correlations are weak and sometimes they're strong, but really, if the S&P is going to be trending down to new lows, you're going to be fighting an uphill battle trying to go long on stocks. And vice versa. If you're on a new up wave to all-time highs on the S&P, you're gonna have a difficult time, or a more difficult time, shorting individual names that have their own independent downtrends, or appeared to have their own independent downtrends. Just my thoughts on that. Anyways, good luck for the rest of the week, and I'll just check in as needed. It's not my intention to make these videos on a daily basis, although lately there's been enough action. I've basically just, every time I see something worth mentioning, I'll make a video. So we'll continue that routine. Alright, I'll wrap it there. Serial Trader signing off.